Hi guys, welcome back to the Crypto Morning Show. Today's video we're having a slow day in news obviously because not really much is going on. It's just talking about the dip of Ethereum and Bitcoin and how that's affecting miners. And we've been over that for the past 2 days. Today the first article that I want to go over, well not really article, but the first thing that I want to show you is the block time of Ethereum. So right here we have the Etherscan average block time chart. As you can see, these are the Ethereum bombs here back in 2017 and then 2019. So in 2017 it got up to around 30 seconds per block, and then in 2019 it got to 20 seconds per block. Then in 2020 it got up to 17 seconds per block. Now if we zoom in on this chart, we can see that in 2022 our block times started to increase around May. This is because of the Ethereum bomb, and we're currently sitting at around 16 seconds, and we're 5 seconds off being a 16-second block time. Now what does this mean for Ethereum miners? Well, profits are going to be going down, and it doesn't help because we're still in the dip of the Ethereum price. These 15 to 16 second blocks are going to be hard for Ethereum miners to even make profits now, and it's going to be going up every 2 weeks. I know Tim Belko said that they are going to diffuse it, but it's going to be another 4 weeks until that is diffused. So we're probably going to see a 17 second, maybe 18.5 second block in the next 2 weeks. This is just because of the Ethereum bomb difficulty. It exponentially gets bigger every 2 weeks. So right now we're sitting at 15 seconds. Right now we're sitting at 16 seconds per block, which is not good for Ethereum miners. Currently I've stopped mining Ethereum. I'm only mining FLUX right now, but I'm lowering the power and just going for efficiency. Just because I'm mining now while we're in a dip, so we're getting more coins and more coins and more coins, and I really think FLUX is going to take off in the next 2 years. Personally, I can see the price going to around $5 a coin, and it has already hit $4 a coin for FLUX. Right now it's trading I think at around 40 cents. So a 10x would be good on the money that we spent now to electricity in terms of, mining profitability. I have around 190 coins of FLUX sitting in the wallet, so we're going to see probably around, that would probably be around $1,000 I believe. So $1,000 if it goes up to $5 a coin. Okay, so the second article that we need to jump into is the crypto miners start dumping GPUs, RTX 3080 listed for $523. So this comes from Tom's Hardware. Cryptocurrency miners in China have started dismantling their operations and offloading the best graphics cards on the second-hand market. As Bitcoin and Ethereum came crashing down and the graphics card price began to normalize, miners are looking to cut their losses and sell off their equipment. Sellers have flooded Jiangyu, a second-hand Chinese market similar to eBay, with many used GeForce RTX 30 series graphics cards. We suspect that the miners aren't the only ones getting rid of their stock, but the Jiangyu merchants also include scalpers and the internet cafe owners. For example, Twitter user spotted that multiple listings of custom GeForce RTX 3080 graphics cards reported selling for 3,500 yuan. Or in dollars that is $523. For reference, the GeForce RTX 3080 has an MSRP of $699. So these used graphics cards are selling way below MSRP. In addition, Twitter user discovered that some sellers previously used fake pricing to attract buyers. In reality, some of the merchants are asking between $600 to $750 for the RTX 3080. Some miners has resorted to live stream auctions to get rid of their graphics cards. As per Baidu post, miners are selling tons of GeForce RTX 3060 Ti's between $300 and $350. Once upon a time, the RTX 3060 Ti was one of the most popular models for mining, given its performance and price tag. Unfortunately, the Ampere-powered graphics cards are just lying on the floor like cheap rugs waiting for the highest bidder. It then goes on to show pictures of this marketplace that is in China, where it's selling for 3,500 yuan. It's not just the major league cryptocurrency miners feeling the crypto squeeze, even big mining farms like Toronto-based outfit Bitfarms have started to take action. According to CoinDesk, Bitfarms sold 3,000 Bitcoin valued at $62 million to reduce company's debt and boost liquidity. The company is now down to 3,349 Bitcoin. In addition, Riot Blockchain, one of the big name miners, has started selling its Bitcoin since April to raise cash. Ethereum's transition to proof of stake, commonly known as the merge, has suffered multiple setbacks over the years. Ethereum developer Tim Belko expects that the merge to reach completion between August and November. Miners still have a few months to unload their assets. However, it wouldn't be very intelligent to pick up a graphics card with a history of operating 24/7 in cryptocurrency mines, even if the price looks attractive. But who knows, maybe used Ampere graphics cards will be dirt cheap by November and worth the gamble. So obviously we are seeing a sell-off of these graphics cards just because people are not being profitable with them. Obviously Tim Belko says that it's going to be between August and November. It's more likely looking at the further end of that, so November, October time right now, just because of the difficulty bomb being diffused, which means they don't have time. Which means they don't have the time to get it done by August, because that was their plan, to let the difficulty bomb go off, and then the transition to proof of stake would be in August. However, it's looking like that's not going to be the move, and we're going to have to wait until further down the line, maybe October, November. Ethereum team's always pushing back this merge, so I wouldn't really take anything they say with a grain of salt, just because they always push back and they always say that they need to do stuff. Basically, Ethereum needs to update all the other users, so the whole blockchain needs to be updated for this bomb to be diffused. It's only a simple line of code to actually diffuse it, but that code needs to be deployed on every node and everyone in the network needs to agree to it. So the third and final article that we have today is the Beijing banned crypto mining, so China miners went underground. We've known this for a while that Chinese people are still mining. If we look on mining pool stats, you can see that a lot of the hash rate is actually still coming from China. Beijing's determination to ban crypto mining in September final 12 months seemed to be the top of a trade place for China led the world. Not so, it appears, as corporations working for the power-hungry computer systems utilized in mining are discovering methods to evade authorities. I nonetheless have 20 mining machines scattered in 5 rural areas around China. One of the Chinese language crypto miners advised forecast on a Telegram name. He requested to make use of the pseudonym Lee to debate his actions and declined to reveal the placements of his operations. So these crypto miners in China are just basically taking them all from the farms and placing them in rural areas where they won't be found. Obviously you can look for spikes in electricity from different areas to figure out which areas are actually crypto mining more, and that's probably what China has been doing. Lee stated he began mining in 2017 and later arranged a Bitcoin mining firm with a number of companies. However, when China cracked down in the final 12 months, they moved the corporate machines to the US and Canada. Nonetheless, he saved some personal gear and runs it in rural areas to keep away from the authorities. So we have seen people move their stuff to America. That's what basically the biggest mining farms would do. When that crackdown came in, everyone moved all their rigs to Texas basically. And even Bitmain have set up their operations in Texas, and they've got a new building right next to a load of mining farms. Bitcoin mining is a metaphor for the usage of computer networks. That's just talking about how Bitcoin mining works. The biggest Bitcoin mining rig, Restore firm in China, bought about 1.5 billion values of rigs in the final 12 months and plans to promote one other 1 billion this 12 months. So people are still buying ASICs, obviously. Zhu advised forecast that around 80% of his shoppers are from China. However, likely they're largely seeking to transfer their firm machines to North America, Central Asia and Africa. Nonetheless, different proof factors to Bitcoin's mining preservation within China. So the so-called Bitcoin hash rate is a measure of the computational energy being utilized by the community and might be usually recognized geographically. China's Bitcoin hash rate share plummeted after the crypto crackdowns. Nonetheless, it surged right up again. As I was saying, people are still mining in China, and still a big chunk of the hash rate comes from China. So obviously there are big crypto miners in China. They're just keeping it under wraps. In January of this month, China managed 21% of the global Bitcoin hash rate to grow to be the second largest Bitcoin producer, trailing solely 37% within the US and the CCAF. So yeah, at the time of the switch I think China was the biggest hash rate producer, but now it's obviously in the US. The FLUX financial institution of China is one vocal opponent to cryptocurrencies, arguing that they create financial instability and facilitate monetary crime. Different commentators have stated that the central financial institution is extra apprehensive about crypto encouraging the capital fight from China, and posing as a menace to plans to launch a digital foreign money of its personal that is going to management. I always get annoyed with these crypto news bitcoin.org website because they always word this really badly. I don't know if it's written by somebody then translated. That might be the problem. One other argument to the opposition to the miners is the computer systems they use devour monumental quantities of energy. Yeah, we know that. However, such measures have their limits. When the ban first got out here, I used to be extraordinarily nervous. However, after discussing with some trade gamers, I made a decision to maneuver my machines out of massive mining farms. So yeah, that's just more about like how people are just going over that. There's not really much else in this article that I want to really go over. Buying and selling favors. Bitcoin miners Lee stated China's enterprise follow the tradition of buying and selling favors and leverage relationships, perform an element in terms of native governments busting mining initiatives. So China basically doesn't really want crypto mining, probably because their government doesn't want to see a different currency being used instead of their actual currency. They see it as a threat, I think, that it's going to be taken over, which is a good thing for Bitcoin in general because that's what it's supposed to be used for. It's supposed to be used for a currency first, and then, you know, in the later years, maybe 100 years down the line, it's going to be used as a hedge against inflation. So pretty much put, everyone in China is still mining. A large chunk of people are still mining in China. I think the percentage of Chinese miners was about 50% back 12 months ago, but now it's gone down to 21%. So basically half the machines in China have been sent over to the US or Canada. But with people still mining, you know, China is still going to make up a large hash rate. Unless China really cracks down on it, as in they actually just like look for specific hardware or kind of things on networks. I don't know if you can actually do that, but they will probably start to crack down on it further. So that's it for the video. I know it's been a short one, just because there's not much news going on today. If you enjoyed the video, please like and subscribe, and I'll put the links for the articles in the description below.